if you still remember this chart, that's from session 48, just probably 5 weeks ago. That's the midterm election cycle. So far, I think this seasonality chart has been working very well, at least for all the swings for the first half of the year. So you can definitely see it right here. So the first pane right here is the midterm election. And so far, I think we are probably still within the bottoming process. And at the moment, let me probably go through it with another slides, because right now, if you look at here, so it's somewhere around August, I think it started from here, and then we just have a breakout and then eventually just pull back. So far, it's currently kind of tested this access line or this previous area. So far, it's still kind of like within the bottoming process, or you can say it's still within the trading range. It's just like different type of the trading range or different formats. So far, I think is kind of a bit encouraging. If you look at the date here or the month here, this is August. So August, there is definitely breaking out and eventually just fell back. So would that happen for the current situation? We still need yet to see, because so far we definitely see the breakout and we see a bit of the consolidation, and eventually I think the pullback is just started. So currently testing the access line or the support area. So whether it will just fail and get back in, we still need to wait for the market for more hints and confirmation. So next one is the analog. So this is the analog from 1990. So the first chart here is the this year chart, so 2022, and this bottom pane right here is from 1990. So that's right here. There's definitely some kind of the discrepancy, because when we compare the analog, it's not just simply like grab one chart and then just look at the structure, and then we just put a line there and then say, well, it's sort of like breaking down and then have similar kind of the structure. A lot more to do with what we need to compare regarding the characteristics of the charts, things like that. So there is one thing that stands out from these two charts, is like there is no capitulation right here, because prior to this slides, I think for the past maybe 2 to 3 months, I do several comparison for different analogs. Some got the capitulation scenario, some doesn't really have one, some is just like in between. But if you look closely, there is definitely proper distribution structure right here. So there is a distribution from the top, and then this is a sign of weakness, and then we have a U-tap, the upthrust of the distribution, and then we have another sign of weakness. But so the distribution originated from here and then started in probably 2022. And right after this big formation, we definitely get a sign of weakness, but there is no follow through to the downside. So there is definitely very bearish outlook right here. So there's a sign of weakness, and then a backup or the LPSY, the last point of the supply, and then followed by this kind of very scary reaction or the sell off. Because if you look at the spread, the gap, is definitely very impulsive. But right after the breakdown, there's no follow through. Instead, there is a test and then followed by a break back in. So essentially, that is no capitulation scenario. So if you look at 1990 on the bottom pane, this is the structure. The distribution only started here. So there is kind of accumulation characteristics in this portion. Right after the sign of strength rally, breaking out, backing up, and eventually we see that there is failure. So this is rather a failure case. So a failure case comes with an increasing of the supply, and eventually we see that here comes a sign of weakness. So the sign of weakness followed by a LPSY, last point of the supply, and then eventually have another breakdown. So similar to here. So if you look at the number, so this is 1, correspond to here 1. It's a bit of like the selling climax, or you can call it sign of weakness. And then 2 is the test. So this is 2. So this is 2. It's a test of the access line or the support turn resistance. And then this is 3. So 3, there is a lower low. So break below. This is also break below, lower low, 3. But right after that, there is no follow through. So that is the similarity. So right after this, the breakdown here, so the 3, we definitely get a test right here. So there's a test, and right after 3, here's a test. So slightly longer duration test, and eventually we get a very good rally up, created a kind of like a breakout or upthrust. So depending whether it will fail or not. So that is 4. That's 4 at the moment. So based on 1990, 4 actually lasted for quite some time, maybe around a month, and eventually we see that there's a failure. So right here, this is currently where we are for the S&P. We definitely get, well, I think we still haven't, I still haven't updated chart. It's probably have another Del bar right here. Okay, so Del bar, and eventually we'll just get a test of the previous accumulation area right here. So somewhere around 4150 to 4100, which is an important support level. Okay, so if we want to look at the updated chart, let me just quickly put up here, show you. All right, so here it is. This is the updated chart. So you can definitely see that we got another bar that's shown up right here. So far that's still 4. And if we really get this kind of the analog, that means that is sort of like a failure, then we'll get this sort of the downswing. So that looks like probably is on its way. But based on the current support level, it's still right now testing the 41 to 4150. So until it's broken, we still cannot really just call this, because right now I think there's still a possibility that it could rebound because it's just testing the support area. So if you look at here, or even here, so this is definitely quite a solid support level, 4100 and 4150 if you base on this previous small accumulation structure. So at the moment, if it does have a rebound or rally up, then I think it could do something like this. And eventually we still need to wait whether it could still keep breaking out, or there could be a failure case similar to 1990. Means like could be a shakeout. Because if we base on the midterm election cycle, let me put up the chart again. So the midterm election cycle actually just signal like we still have a leg down, because if you look at now it's probably August, a leg down, and then still keep consolidating, and then near the end of probably September into October, there is kind of a shakeout time, maybe a spring. So that really marks the bottom. So that is another possibility which could match up with this current scenario. So would that be something like this, consolidation, and then until September into October, and then we see that there is a shakeout type similar to 1990, and then eventually it didn't really create a lower low, but this actually marked as a test of the prior low, and eventually just kickstart a bull run right here. So that is one possible scenario. So if you look at 1990, so you can see that right after the test or the shakeout, then here comes the bull run, and then the rest is just the history. All right, so I think at the moment, 1990 could be quite a relevant scenario for the current situation that S&P 500 is going through. But ultimately, this is really not the point, because we want to trade the stronger stocks. We want to trade the outperforming stocks. So as long as there is decent entries and those trades are working out and getting the momentum, then I think we still can ride it to the upside. So that is the point. All right. But so far, this current pullback actually sort of acted like a litmus test, because like if you look at a lot of the stocks that's in my watch list or the outperforming stocks, so there are really maybe a handful of them really stands out, because while the market is actually take a bad hit, there are just a handful of them really buck the trend and also charging up. So those are the stocks that we need to pay attention to, because they are really those outperforming stocks that we need to participate. All right, so back to the slides. There's a no capitulation scenario we just went through. Okay, failure. So what if there's a failure? So what if there is no analog to refer to? It's unlike the midterm election cycle. It's unlike the 1990 analogs. So what if all those fail? So we need to look at the characteristics of the failure as well. So in case there's really something's wrong, it did not really create a higher low like this. Instead, it might just fail. Maybe it could create a lower low. And I think we really want to maybe anticipate that kind of the failure case as well. Because first, is very important that we need to sort of form a view, a direction. But if all those things, all those analogs, seasonality chart, and even the price and volume confirm that failure, then we really need to be flexible and also to quickly reverse the trades. And because all those trades or swing trades really will need to have a stop loss. So definitely, I think those will be triggered in case there is a failure. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.